Okay, so I'm gonna make this video. I'm gonna try to keep it as short as possible. But what I'm doing now is what I've learned in trying to help people understand how to read these charts in order to be successful with trading binary options is that everybody looks at the charts and pulls something different from it. So I'm always trying to figure out new and different ways to make things more simplified so that for the most part, whenever you're looking at the charts, we're typically seeing the same things. Um, so this is going to be probably the last update that I'll do for any charts that I've offered in the past. So if you've ever gotten any charts from me, please feel free to give me a or to contact me. You can shoot me an email. The email will be listed on the bottom of this video, or I'll give you the email address at the end of this video. But right now, I'm just going to go ahead and explain to you what I've done with these charts and how they have tremendously given more accuracy than any charts that I've ever done before. So what you're looking at now on this screen is going to be one, two, three, four, five, four parts to one chart. I split them up first to show you what each individual part does, and then when I'm done, I will go back and I'll show you how all of these things are collectively on one chart and how they all work together to help determine which way the market is going to go when you're trading binary options. Um, these charts are going to work for any Euro broker that you may use. Also great for Nadex. If you need for me to set these charts up for you, all you have to do is just let me know what currency pairs you need it for, what time frames you're using it for. I can tell you this, with the Euro brokers, I set the time frame for 1 minute charts for 10-minute trades, 2 minute charts for 20-minute trades, 3 minute charts for 30-minute trades, and so on. If you do hourly trades, I can set the charts for 6 minutes for hour trades. Most of the trades that I do are 10 minutes or 20 minutes. I just think I don't like to be in trades that long, so I try to keep it as short as possible. If you're trading with Nadex, these will work for the hourly charts. Nadex has the 2 hour trades, and also these will actually work for the 5 minute trades as well, using the same 1 minute charts that I use for 10 minutes on the Euro broker. The reason why you can use these on the 1 minute charts for the five, or excuse me, the 1 minute charts for the 5 minute trades is mainly because Nadex has a built-in indicator with their pricing. So you can kind of, between the 1 minute charts and Nadex's pricing, kind of figure out which way the market is going to go. And it's really not that hard. So what I'm going to do now is just explain to you how these charts work and show you how precise they really are. So this is the core of your charts. These are just candles. The only thing you see here are just regular, in this case, these are 3 minute candles. So if I was using these charts, I'd be doing 30-minute trades. But these are just the candles. And then the lines that you see here, up top and below, are what I've learned to start using from a colleague of mine, which is support and resistance. Basically, what it means is that this um, is resistance here. And this basically means that this is the highest point that the market has been within X amount of the time frame. Basically, when your market hits this top point, it's either going to do one or two things. It's either going to stop here and go back down, or move past here and then shoot up some more. So this is the resistance, and the same thing for the bottom. When you get to support, it's either going to stop here and go back up, or if it pushes past this point, then it's going to go further down. That's basically the short. I'm not going to get too much into that. That's just one part of pretty much the charts that I put together. So if you're looking at this particular chart here, this is pretty much, if you just look at the points where the resistance was here, you can see the market goes down at this point. Here, the market goes down at this point. If you go back some, same thing here, the market goes down. Here, the market goes up. Here, it goes down. Here, it goes up. The only thing about it is that when it goes up and down, you really don't know for how many candles or for how long it's going to go down, or up for. And so that's why this is only a small part of the system that I've put together. So in this case, um, we have the support and the resistance part. All right. Now, down here, there are two what we call histograms, and these are very important as well to kind of help give you direction. So this is another part of the charts that I put together. So obviously, where you see the green, the lighted, the higher, the like the lime color green, the market is on a full upward trend. When you see the darker color green, it means it's still on an uptrend, but it's heading down. The same thing with the brighter color red, it's on a full downtrend. The burgundy color red means that it's still on a downtrend, but it's heading up. This one is just regular green and red. These are two different histograms that we're using. So this is just regular green and red. There's no different shades and it just means uptrend and downtrend. So for the most part, what you're looking for if you're going to take a buy is your candles to already have hit the support line down here and moving back up. But in addition to that, you need for this candle and this candle to both close green. So for instance, here, it's moving back up, but at this point, these are still red. Here, this one is still red, this one is still red, this one is still red. So the candle that you want to enter that you would normally want to enter the trade in would be here. Excuse me. It would be this one because you want the last what you want is the candle to end up closing green on the top and the bottom. So it would actually be this one, which means that you would enter the trade right about here. And you see, yep, it'll be here. So the market is actually going to be moving up from this point. Now, again, you don't know how long it's going to be moving up for, but at least we do know that it's going to be moving up. So that's, at this point, that's all we need to know for this part of what I'm, trying to explain. Now, another part that we're using is what we call it's an oscillator. Now, this particular oscillator is really it's very accurate as far as if you look back at the history, the oscillator moves as the candles move. So what happens is when the green line, or excuse me, the red line crosses over the green line at the top of the chart, the market starts to move down. When the green line crosses over the red line at the bottom of the chart, the market starts to move up. But again, you don't know for how long it's going to do that. So in this case, it started moving up here, but it only moved up for one candle. Then the red line crossed over the green line and it only moved down for like three candles. But when the green line is at the crossing over the red line at the bottom of the chart, chances are it's going to move up quite a few candles. But again, you just don't know. But when we put the whole system together, you'll be able to tell. So that's what this oscillator does for you. This other part here is going to be, these are just the candles, and then there's only one arrow indicator on this entire chart. Um, you won't see it that often. You'll see it at the turn of the market. So for the most part, what you're going to see is a red, or it's not a red arrow, a down arrow, or a put arrow, or a sell arrow. The next arrow you're going to see is going to be an up arrow, a call arrow that just points up. So they alternate because what we're doing is catching reversals and watching the market twist and turn. And the key is to catch the market at the point where it's about to make a reversal. That's pretty much the best way that I've learned lately, of how to trade. So here you go. This is a arrow pointing up. You see the market did go up. Ultimately, the top point is here, and then it's going to start to go down, but you don't get the arrow till here. But the point is, when you see these arrows, the market tends to move in that direction. Again, we're going to filter out how to determine when to take these trades once we put the entire chart together with all of the different indicators working together. This last thing, these are Japanese candlesticks. I've started using these because they tend to be, what they do is, instead of the regular I use the regular candlesticks as well. I use them both. Um, but what it does is it kind of cancels out a lot of the market noise and gives you actual movement and not just the whipsaws that you will normally see with regular candles. So I also use these as well. And the way that I use these is in conjunction with how these have to measure up and be green before you take a buy or red before you take a sell. Same here, because this is going to be on the bottom of the final chart that I show you, and it has to be red to take a sell along with here, or green to take a buy along with here. But I'll show you once you see the chart all put together. I just wanted to explain to you all the components of the charts, and then I'm going to put all of this in one chart together, and you'll see how it flows and how it works and how you determine how to take a trade. So I'll be back in just a few minutes with the final chart, and then I'll explain how the trading works from that. Okay, so here's what your chart's going to look like with all of the components put together on one chart. This is the Aussie yen uh, currency pair. So what I'm going to do real quick is just go over a couple of the movements in the market just to show you how these charts work. So here's where your pivot points are, or your resistance line, support and resistance line. Here's your oscillator here. Okay, here are the two histograms, and then here are your Japanese candlesticks. So the first thing you want to look at is you're going to be alerted when an arrow is present, because that's everything centers around the turn of the market, and that only happens when you see an arrow. So let's look at this one, for example. When this arrow went off, the background went red, and then there's a sound alert to let you know that this is one currency pair that you can probably take a look at to see if you would take a trade. So when this happened, what you want to do is, you see the arrow here. When this candle closes, you want to make sure that in addition to the candle closing, that the histogram right below it closes in red. This histogram also closes in red, and then the Japanese candle closes in red as well. Okay? In addition to that, you want to make sure that no more than probably 10 candles prior to the arrow, you do have a resistance line built, because it's telling you that the market is about to go back down. The other thing is, you want to make sure that the oscillator has the red line crossing over the green, because it's going to move down. So all of this has already happened at the time that you get this arrow. So this would be a good time to take the trade. On a 3-minute chart, you're going to take a 30-minute trade. So again, this would apply to a 1-minute chart or a 2-minute chart. The only difference is whether or not you're taking a 10-minute trade or a 20-minute trade or a 30-minute trade. In this case, since it's a 3-minute chart, it would be a 30-minute trade, but it's only 10 candles either way, no matter which chart you're using. If you're doing a 1-minute chart for a 10-minute trade, it's only 10 candles. So you would enter the trade after this candle closes to make sure that the arrow is still there when it closes. This would be your entry point for the trade, okay? If you count 10 candles moving forward, you'll see, because you would have taken a sell, that the trade actually won, because 10 candles 10 candles above, in front of this, the market went lower. So here we go. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. The market ended here. The trade would have won because you would have entered the trade here. Okay, so that's just one example. Now, one thing I do want to tell you, when you're taking these trades, you want this oscillator to be as close to the top as possible. When you get this oscillator at the top, plus you have your resistance point here, or the oscillator at the bottom, and you have your support point here, and then you have your arrow within, actually I say 5 to 10 to keep it safe. I would say within 5 candles is where you want to enter the trade. Like this one is more than 5 candles, and if you enter the trade, you would have entered the trade here, and the trade probably would have 1, 2, 3, 4, 5, 6, 7, 8, 9. It would have, if it would have won, it would have barely won, but it probably would have lost. So I would say no more than 5 candles between the arrow and the most recent point, the high or low point. Okay, so let me go back here a little bit to give you another example. Here's one. Let me even line this up. There's no time on here. 1 second. trying to get the time on here, but I'm not able to. So I'm gonna just assume, since I'm not gonna move this one, but I'm just going to assume that the candle down here lined up with the rest of them. And so here we have the green, or the arrow pointing up. We have the turning point here, and it's only two candles in between the turning point and the actual arrow. So you would enter the trade here. And if you count 10 candles, you'll see that the trade should have won. I'm going to count it here now. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It did win just by probably a few pips, but it did win. So it's kind of close. Now, I do know that sometimes when I'm taking these trades, when I see this arrow, I don't necessarily always wait until the candle closes. If I see the arrow and it's there, sometimes I'll just go ahead and take the trade, especially when it's close to the turning point, because even if for some reason, because of market movement, it disappears, it'll end up appearing here, but you'll already be in the trade. So that kind of is going to be a personal decision if you want to do it on the current candle, or wait till it closes and do it on the next candle. Okay. Let me find another point. Let's see. Okay, here's a good one. You see a bunch of arrows here. They're still going up, down, up, down, up. They are doing that, but the reason why you're going to know not to get in the trade is because this oscillator is the highest or the lowest. Okay. That's what it's going to sound like when you get an indication of a trade. Here is what it looks like, and you're going to see the arrow that's pointing down. Now, I would not get in this trade because the most recent turning point was a very long time ago. It's way over here. That's too far. The trade that you would have wanted to get in would have been this one here, which is the one that we just counted out. I wouldn't take another trade on this currency pair until the market moved in the opposite direction, until it went up. So what's going to happen is this oscillator is going to end up going down below, and then it's going to hit the top. Now that arrow just disappeared, but it's going to come back. So that's why I was saying you can get in the trade on the current candle or wait to the next candle. If it doesn't come back on this candle, it would come on the next candle. Now, another way I know not to get into this trade is not only does the arrow, is it too far from this point, but you don't have the red candle here either. It's kind of green, so you don't know which way the market is going to go. So this is kind of helping you decide. These are factors that you just look at when to help you decide when to and when not to get in a trade. Basically, if everything doesn't line up, the safest thing to do is to not get in the trade. Okay, let me look for another one. And this is just the arrow coming back again. So it's going to keep doing that during this 3-minute period. So like I said, it's up to you if you want to wait until the candle closes, or um, do it on the current candle. Okay, I'm going to look at another currency pair because it's this time of day, the market is kind of funny. So let me see if I can find another pair. Just to give you an example. See, the market is not during this time of day. It's kind of okay. Here's a buy signal. I wouldn't get in this trade, number one, because I want this oscillator to be at the bottom, but I need it to be at the bottom somewhere around here because I want it to move up. See, it's already done some up movement and it's coming back down, so I wouldn't get in. I wouldn't get in there anyway. Find one of the like a more perfect setup to show you what it looks like. Like I said, this time of day is really hard to trade. Okay, here's one. All right, so this was earlier this morning, actually, way early this morning, London session. Um, so you get the red here. Excuse me, got the white candle pointing down here. The red candle closes here, red. Both of them close red. And then you have your turning point here. There's only two candles in between it, so I would enter the trade either here or here. If you entered it here, you're going to win it either way. If you count up 10 candles, so you start here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It is below here, so this trade would have won. So that basically just gives you an example of, and then again, we're assuming that the candle closed at the bottom too. I can't move this part to, like I can move this one so I can line them up, but you're just assuming that as well as everything else lining up, your Japanese candle is the same color as well. Okay, see if I can find at least just one more. Okay, here's a good one here. Here's your turning point. Here's your arrow. The oscillator is not down as far as I want it to be, at the bottom, but it is down far enough because these are close enough together to maybe I would probably have taken this trade. And some of these things are going to be just your own judgment call, and you're going to get to know your chart, so that's how you'll know when to take the trades. So I would either have entered the trade on this candle. Actually, no, I wouldn't have. I wouldn't have entered it on this candle because this didn't close green. Or excuse me, the one before it didn't close green. This one didn't even close green. I would have entered the trade right here because this is the one where they both closed green. So if you go in here and count up 10 candles, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, you see that the trade very easily won. And that's pretty much um, all you have to do on here. So I hope I've explained it pretty well. I'm reaching out to any past clients that I've had. If you're interested in getting this set up, again, it works with any Euro broker, any time frame, 10, 20, 30, an hour, 2 hours. I just have to adjust the candle frame. So I would just need to know what time frames you're going to be selling or trading. I can do it for multiple time frames and put them all on one chart. I mean, I can customize it for you however you want it to be done. You can send me an email at youngcommerce, YOUNGCOMMERCE @gmail.com, and it'll also be listed on the bottom of this video. So if you have any questions, please feel free to send me an email, reply to the video, um, or if you have my contact information, if we've done business before, you can shoot me a text, easily accessible, all kind of ways. So hopefully I'll hear from you soon.